Hello, good morning from a rather glorious Wednesday the 15th. I'm FX Plu and this is the market brief. Now it's a bit of a cliche these days, but this MPC meeting is one of the most important since the financial crisis. And they're in a bit of a pickle because they cocked it all up last summer when they didn't act to curb rising inflation. Yes, I get it, it was difficult at the time. The Yanks were saying that the post-pandemic inflation is transitory, so the Brits were saying that post-pandemic inflation is transitory. But have we learned nothing? I mean, the Yanks said that Iraq had weapons of mass destruction, and that got pretty messy for us when we jumped on that bandwagon, didn't it? Questions are being asked about the total independence of the Bank of England and indeed why the government is not perhaps more involved in economic policy making at such a critical time for the economy. But for any of you getting whipped up by that dialogue, the answer is pretty simple. Politicians they're all a bunch of muppets. If you need me to call references, I could call Norman Lamont and George Soros to the stand for cross-examination about the ERM and what happened to all the UK's gold before Black Wednesday. Spoiler alert, John Major and Norman Lamont threw all away the gold while trying to prop up the value of the pound within the ERM. Ultimately, they had to raise interest rates to 15% to encourage the market to stop selling sterling, but none of that worked and we still crashed out of the ERM. Bravo, boys. Well done indeed. That's politicians for you. But it does rather put things in perspective, doesn't it? All those concerns about rates moving to 1% tomorrow. 15% when I were a lad. Bloody snowflakes. But the Bank of England is under pressure to make the right call on monetary policy, but it's a tough one when they're facing runaway inflation on one hand or causing a major recession on the other. Sentiment suggests that as inflation is the current issue we're facing, that is likely to be the target and interest rates will rise again this week. The market is not terribly impressed with the prospects for sterling though. Yesterday we broke below 120 against the dollar, down to about 119.35, and we're about 114.75 against the euro this morning. And much of that is driven by the rate divergence with the US. The Fed has clearly committed to tackling inflation, and we expect another 50 basis points of a rate hike there. But we may just as easily see them hike by 75 basis points. But meanwhile, the UK debate is over 25 basis points or zero. It drives a significant difference in yield when you're in the money markets, moving gazillions around looking for return. And that in turn affects the demand for currency. However, the US economy is beginning to falter and there are growing concerns about a US recession because where the Fed policy is so laser focused on curbing inflation, the risk is that they hike too fast, and ultimately choke off growth. The market has been in risk-off mode this week and has pushed the dollar index back towards recent highs. Yesterday we touched 105.65 and euro dollar opens this morning around 104.50. That's it from me. Have a great day. Join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.